Hello.
Bro, how are you doing?
Yeah, I'm good. How about you, sir?
Yeah, I'm okay. Finally.
Oh, finally.
Wow. I see you're very anxious.
Yeah, I like if you say me, I was back on August 2nd. I was chasing you. Give me the course, give me the course.
Really?
Well, see, I'm taking forex as a serious, and I'm taking this as a full time. I got redundant because of COVID, and I don't have any job opportunities, so I'm taking forex seriously. Previously, I was just taking it as a part time. Now I'm going for a full time.
Oh, okay. That's nice.
Yeah,
Um, okay, what's your name? Your name is Azam?
yeah, Azam Muhammad. Yeah,
Okay, okay. And you're from Indonesia?
no, from Bangladesh.
Bangladesh?
Yeah,
In India?
no, it's a separate country beside India.
Oh, Bangladesh. Oh, okay. I thought it was a city in India.
No, 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 no. India is a separate country.
Okay, so how did you come across my Instagram page?
See, I was looking for some course material. See, I was trading demand and supply. So I come to know about three different group, which was one of is you, another one is RCV, and another one is transparent. So I filtered out of these three. I'm gonna join something or the other. So then I was trying to find RCV. They are just giving out the videos and you study and you just go ahead. But transparent forex FX is something they are mentoring, and they put a student community, and you trade, and hey, and the mentor every day he analyzes the market and share with the students. So that one I found better. But when I come across your platform, your Instagram page, I got to see your risk reward ratio is very good. And I was trying to look for something, I risk less, and I have a good ratio to earn at the end.
Okay, all right. That makes sense. That makes sense. That makes sense.
Yeah. So tell me about
Okay,
yourself.
so
I just wanted to know about you because I saw your interviews, but other side I have no idea where you come from, across, and your
oh no,
experience.
no, okay. I'm Ghanaian, but I studied in the UK. And, I'm currently based between Ghana and Cape Town. That's South Africa. So I'm a financial analyst, a forex mentor, order flow trader, and I learned order flow trading in 2013 from an ex-bank trader. He was trading in Goldman Sachs Bank on Wall Street.
Okay.
So ever since I've been trading order flow, I don't trade indicators, I don't trade chart patterns.
Right.
100% order flow, 100% order flow.
Right.
I teach people how to find exactly where banks and institutions are buying and selling on a price chart. Because at the end of the day, it is um, banks and institutions have the capacity to have an influence in price. Retail traders do not have that capacity. So since banks and institutions are very, very successful at trading forex, it makes sense for us to join them instead of trading against them. And many retail traders do not know what is going on in the forex market.
Right.
So I just decided to set up my academy to share my knowledge and to help people stay away from indicators and chart patterns and follow pure order flow or demand and supply.
Okay. See, for my side, I have also viewed some of the demand supplies on videos from YouTube, from Chris Lead, Sam Siddhan. Yes, I do accept they have an edge of trading supply and demand. But recently, few days ago, I was doing deep research. I found some trader like Transparent FX and another Hunter FX. They are using court report as a main indication. Is it CFTC
Are
court
you using
report
what?
works?
You said they are using what? What are they using?
Court report.
What is
Court
that?
Scott report is a weekly where institutional and financial
No. Those things do not work. They do not work. That's not order flow. That's not order flow.
CFTC. You have heard of CFTC?
Of course, I know. I'm a financial analyst. Those things are not order flow. We are talking about the total order flow of the whole market represented on the price chart. So don't worry. That's what you're going to learn. So let's just start.
Yeah, sure. So how long you been trading and?
Oh, bro, I said I learned order flow from 2013 till now. So that's over 8 years.
Wow, great, great.
Yes. So in a few days, on the 1st, I'll be launching my online school. That's what you see on the screen. And I am going to make sure that, don't worry, I'll mentor you. Once you've joined, when you graduate the advance, I'll put you in a global group. And you have a community. You know, usually all Forex groups are people with different strategies, too much noise. But my academy is just for order flow. Everyone I've mentored that's trading order flow is in that group. And at the end of the day, yes, you can get support from anyone in the group when you have questions, or we discuss trades some of the time, you know. And it's a very simple strategy.
Great.
Very, very simple strategy. So let's just start. So welcome to Golden Bridge Trading Academy, and let's just go straight to the beginner's course. But before that, tell me about your trading journey. And yes, your trading. You've already told me why you wanted me to mentor you. So tell me about your trading journey. How long have you been trading, and what have been your outcomes?
Well, yeah, see, I started indicator with the first, then I realized that they are the lagging. So then I started with plotting the zones, supply and demand. But to a point, I get confused when I am trying to analyze from higher time frame to lower time frame, and the point where I can spot the reversal or the order flow which you are going to teach me. I think so that will bring me a change. So out of
Nice one.
yeah, so the last 1 year you can say I was making slight profit, losing, winning, losing, but it's not consistent.
Nice one. That's the story of everybody.
Yeah.
All right. So statistics say 90% of retail traders lose money trading the financial markets due to poor risk management,
Right.
skills, or excessive use of indicators and oscillators that lag price, just as you said. Indicators typically provide retail traders with high risk, low reward. What you are looking for is low risk, high reward. You say you want to risk small to gain more, right?
Right.
Low risk, high reward trade signals. Way after the trend has started. At Golden Bridge Trading Academy, we teach our students how to predict market turning points in advance with a high degree of accuracy by finding where big banks and institutions have their unfilled orders. So let's start with the beginner's course. It's a very, very simple strategy. But before we go, I want to make it clear that the demand and supply that you know about is not the demand and supply I'll be talking about.
Mm-hmm.
Anybody that trades demand and supply is very, very frustrated, because demand and supply simply means buyers and sellers on the price chart. And at every price level, there are buyers and sellers. So if you're a demand and supply trader, you are trading everything on the price chart. That's why you cannot be consistent. You understand what I'm saying? When you're a demand and supply trader, you have to be picky. You have to be choosy. You have to make sure that you focus on only a specific kind of demand and supply. You have to make sure that you actually trade the largest imbalances on the price chart. A demand zone just means level with buyers. So if a level has 10 buyers and another level has 50 buyers, the second level with 50 buyers is stronger than the first level. Do you agree with me?
Yes, I understand. Okay.
Yes. So what it means is that when we are talking about demand and supply, let's focus on the demand and supply of the biggest banks and institutions. Those who have billions of dollars in their accounts. Let's focus on their demand and supply. Do you understand what I'm saying? So when you ask me a question, are you a demand and supply trader? I won't say yes. I'll qualify it and say I'm a big bank and institution demand and supply trader, meaning that the kind of demand and supply I am looking for in a price chart represents that of big banks and institutions. Do you understand?
Mm-hmm. Okay.
Okay. So the whole aim of this course or these lectures is to make you understand. The whole aim of this lecture is to make you understand. Just a second, hold on.
Sure.
I just forgot somebody was supposed to join this class and we'll be doing so in a minute. So I just want to wait for him, then I start. Okay?
Okay. So someone will be joining with me, huh?
Yeah, just one person. Yeah.
Okay. So new joiner, yeah.
Yes.
I don't know if I have to use MT5 or MT4 for the analysis.
MT5, MT5.
Okay. Okay.
Because you see, my strategy is I do forensic multiple time frame analysis. Are you joining with a new machine?
New machine.
Oh no, guy, I saw Azam accept Azam, but I thought you are joining again.
No, no, no.
Yeah, so because we do multiple time frame analysis, let me tell you, every single time frame is important. Do you know why I get so accurate entries? Because I'm able to do analysis from the monthly, weekly, daily, 12-hour, 8-hour, 6-hour, 4-hour, 2-hour, 1 hour, 3 hour, 1 hour, like that. I don't miss any time frame because I want to see everything clear. Do you understand what I'm saying?
Okay.
So MT4 wouldn't give you that kind of opportunity. Do you understand what I'm saying?
I got you. Yeah.
That is why I advise people to use MT5. Yes, MT5. MT5 is the best.
Okay.
MT5 is the best.
Okay, this is just my personal question. Like we got 64 or 68 different types of pair. So we will have to analyze all of them, or we can make some favorite or filter.
Yeah. Someone like me, I trade 35 pairs. 35.
Wow.
35 different pairs, So you see, the opportunity works on every single market. So the more pairs you have, the more opportunity you have to trade, Yes. So I have about 35 pairs. Yeah. So that's about it. Anyway, so
So that 35 pairs I need to analyze from a higher frame to lower time frame, and filter the best
Don't
one.
worry, don't. I'll show you. You see, it's not that complicated. You just have to find the trend and find the zone. Find the trend, find the zone. Find the trend, find the zone. And I've broken down. This is the best. This is the best course in the world. You know, I've broken it down. I've broken it down to give you steps. You know, so don't worry. By the time we are done with the course, you understand everything. I know what traders need, so I'm not just giving you the knowledge. I'm giving you the knowledge, and I'm giving you a strategy and a time to be trading. You understand what I'm saying?
Got you. Yeah.
Yes, yes. So now you become my ambassador for Golden Bridge Trading Academy in Bangladesh, right?
I would love to do it. Really, you motivated me that day. Really, I got so motivated that you would make me that partner for my region. Definitely, I
Oh
can
yes, yes,
look to work with brokers or agents. There's a lot of way
yes, yes,
people like to improve their skills, but people are not getting a good mentor or good educator.
yes, 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 yes. You see, and this is not just an academy. This is a university for order flow. As you can see, how many mentors have an online school where you can go with videos and infographics and everything. You know, they just do one-on-one mentorship talking. They don't. There's no online school to teach it properly, and that's what I'm about to establish. You know what I'm saying?
Right.
So,
And one more thing,
Alan,
after
yeah,
graduating from the your university, as you say, we gonna get any certificate kind of documented that I studied and got.
yes, yes, yes. That's if you are done with the professional course, not advanced.
Oh, okay, okay.
Because when you become a professional trader, then you've gotten the full knowledge. But at the advanced level, you're picking highs and lows of only the day. You don't even know how to trade reversals. By professional, you know how to trade reversals and you know how to trade highs and lows of the week and the month. So the advanced is for short-term day trading income, and the professional, the advanced is for short-term income, daily trades. And the advanced is for, the professional is for long-term wealth. You know what I'm saying?
Right, right.
Yeah,
Alan,
yeah, I'm here.
how are you?
I'm great, thank you.
Okay. So you're excited to be on?
Yeah, I am very much excited.
I see. So we have not really spoken about anything, but we're just having a little chat. So now we're just going to talk about a few things. Now, I created this course in a way that someone who comes from a background of no knowledge in Forex will still gain the basics of Forex and also order flow fundamentals. Usually, when people come in, they want to take, say, Willie J, I want to take an advanced course. How much? I want to take a professional course. It doesn't work like that with me because I'm not teaching indicators and chart patterns. I'm teaching order flow. So even if you've been trading for 10 years, you are still a beginner to my course. Because 99% of traders do not know order flow. So it's a new concept to you. So when you come, you just have to humble yourself and learn. There are people in my class that are 5 years trading, 10 years trading, 8 years trading, 2 years. They don't know order flow. I'm like, what have you guys been learning? You know? All right, so the first lecture topic is just an introduction to financial markets. And Alan, you know why we are here, right?
Yeah.
Okay, cool. So the first lecture is an introduction to the financial markets. You need to understand what the financial market is. And as I said, don't let order flow scare you. It's not that complicated. All that you need to understand is actually how banks and institutions are trading, the imbalances they create on the price chart, and the mistakes retail traders always make. But before you go to understand those mistakes and how banks trade, you need to understand the environment in which you are trading in, the financial market. You need to understand what is the financial market. The financial market is just a broad term used to describe any market where buyers and sellers meet to trade. When you say trade, you mean buy and sell. So in the Forex market is a kind of or a type of financial market where buyers and sellers meet to exchange currencies. Now we need to understand that in the Forex market, there are many participants. There are millions and billions of people trading, but there's only two groups of people. You are either a bank or an institution, or you're a retail trader. Banks and institutions are successful, retail traders are not. So which group do you want to belong to? I'm sure the banks and institutions. So you have to think and trade like a bank. At the end of the day, it's so funny how when people copy my posts, they even use my hashtags. Like they even copy their hashtags with my name and everything. It's so funny. But anyways, the financial market participants are central banks, investment management firms, banks and institutions, retail traders. Now, these groups of people, except retail traders, are very successful and they are very sophisticated. What it means is that they are recruiting traders from all over the world, from the best universities in the world. They are very abreast with technology and with information. So for you to take money from a bank, you cannot do it because they have all the knowledge necessary to make money. If you understand how trading is done, you will forever change your strategy in trading. Trading is taking someone's money. When you make money, somebody has lost. So why do you always want to come to the market to give away money? You must learn to take money from people. It's not illegal. You earn the money by making the right decision. So we're in a business of decision making, and you always have to have the right knowledge to do so. The Forex market is the largest financial market with a daily turnover of $6 trillion. Enough money to even eradicate poverty from Africa and Asia and everywhere. Too much money. But people still cannot make money daily because of their wrong strategies and how they believe the market actually works. So let's look at an example of a Forex trading transaction. That's a transaction between a United States-based company and a UK-based company. Now, the UK-based company is obviously selling steel. Let's say they are selling steel and the American company wants to buy. All that they have to do is the American company has to sell their dollars to buy pounds. So once you sell dollar to buy another currency, that's an example of a Forex trading transaction. So when dollars are sold to buy pounds, that's an example of a Forex trading transaction. And that's just basically about the financial market. So we've learned who the players are, and we've seen that these guys are big giants and they are very sophisticated. So we need to understand that to take money away from them will be a very difficult task. But if we can learn their strategies and be on their trading sites, then we can also be as profitable as they are. You understand? Okay. But Alan, why is your mic muted? Like, I mean, I like to interact. Are you doing something? Or?
It's because of the noise in my background. It's because of the noise in my background. So I'm here.
Oh, okay. But I thought you had a quiet place.
No, I'm here with you.
Okay, no problem. No problem. That's fine.
Thank you.
All right. So let's look at an introduction to Forex trading. Now, Forex trading is just an art of exchanging one currency into another. And an investor will buy a currency he feels is going to appreciate in value, and he will sell a currency he feels is going to depreciate in value to earn profits. Now, we need to understand that obviously currencies are traded in pairs, and the first currency appearing in the currency pair quotation is the base currency, and the second is a quote currency. So when you have USD/JPY, you obviously know that the first currency is the base currency, and the second is a quote currency. Now, there are two main ways to make money buying and selling in the financial markets. These strategies are adopted by big banks and institutions. They always want to buy low. When in this academy I say low, I mean cheap. Or when I say high, I mean expensive. It's two ways you can make money. You buy low and you sell high. So you buy something at $5, you sell it at $10 to make $5 profit. Or you can sell high and buy back low. So you sell something to somebody at $10, go back to buy it from them at $5. Now ask yourself this question. Why do retail traders do this the opposite way? They sell high, they sell low, and they buy high.
Might be bank are manipulating their thoughts.
No. Banks are not doing anything.
Maybe because they don't know at the right price at which to buy.
No, because of the use of indicators and chart pattern that lag.
Oh, yeah.
Okay.
Yeah, exactly.
So when they want to buy, listen to things that they tell us. Wait for confirmation. Hey, bro, how do you know it's going to go up? Wait and see 3 bullish candlesticks, then you buy. Anytime price moves up, anytime price moves up, it's high risk, low reward. Now, it is just like telling you, do you know that the price chart, the exchange rate is a price chart? As you move up the price chart, the exchange rate becomes expensive and it favors the sellers. As you move down the price chart, the exchange rate becomes cheap and it favors the buyers. So why do you want to buy when the price is going up? It's total madness. But at the end of the day, it's the same buying and selling we are doing in real life that we are doing on the price chart. In real life, when something is $10,000, you want to buy it at $8,000. When something is $10,000, you want to pay $7,000. You're waiting for Black Friday discount coupons. So why do you come to the forex market? Something is $10,000. You say no. I want to buy it at $20,000. You are sick. No, if you understand that it's buying and selling that you are doing, and you are buying when the price is already going up, then there's a problem with you. You know, there's a problem. There's a very big problem. But at the end of the day, I told you what the reason is, and you can come out of that school of thought if you allow yourself to find higher knowledge. All right. So there are 3 main reasons why people like to trade forex. That's obviously trade volume. When we speak about trade volume, we talk about the fact that the forex market is the most liquid market. When you talk about liquidity, you're talking about how easy it is to buy or sell a financial asset without affecting its price. When you want to buy instantly, there's a seller. When you want to sell instantly, there's a buyer. You don't wait when you're doing transactions in forex. But the real estate market, when you want to buy a house or sell a house, you have to wait a while, maybe weeks or a couple of months. So the liquidity of the forex market is higher than the liquidity of the real estate market. So when we say trade volume or liquidity, that's what we're talking about. The second is the time of operations. It's a 24-hour market, and anytime, any job you find yourself in, you can still trade forex when you have some time, because it's a 24-hour market and closes on Friday evening. All right. And the third one is the greatest reason why I love forex, but there's a big misconception about this aspect of forex. That's leverage. People think leverage is a bad thing. Hey, you are blowing your account because of leverage, or something funny like that. I don't think that is true. You don't blow your account because of leverage. You blow your account because you are not managing your risk well. Leverage is a double-edged sword, and it just basically helps you win and it helps you lose. So how about if I'm a trader that wins more than I lose? Will leverage affect me? It's a question to you guys.
Oh, you would?
Yes. So currently I'm looking for a broker who can give me 1 million is to 1. 1 million is to 1. I'll use it because I'm a trader who has a high win-loss ratio. I win more than I lose. Very, very high win-loss ratio. So I don't fear leverage. My broker only sticks to 1:500. And because they are one of the best brokers in the world, I don't want to leave their platform because of the volume of money that I'm trading. But at the end of the day, if I could find another reliable broker with 1 million is to 1, I'll still take it. Because if it's going to help me in 2 ways, kills me when I lose and makes me when I'm gaining, then I'm going to be gaining more than I'm losing. It's going to favor me more than it's going to kill me. So let's look at forex trading terminologies.
Okay, awesome.
Okay. So forex trading terminology, there are 2 important principles I'm going to establish in this lecture course. Now, the first one is we need to understand that in every market, a buyer needs a seller and a seller needs a buyer. ShopRite doesn't open their shop to decorate the cities. They open their shops as sellers because they need buyers. For ShopRite transaction to be completed, they need a buyer. The same way in the forex market, for your transaction to be completed, you need the opposite of your trade. When you are buying in forex, somebody has sold to you, but you didn't see the person's face, or the things were not shipped to your house, so you don't believe that somebody sold to you, but somebody sold to you behind the scenes. When you buy, somebody also sells to you, and when you sell, somebody also buys from you. So you need to understand that it's a transaction between a buyer and a seller, and the broker is there to match orders, to match buyers with sellers, because the buyers are at a certain price level, sellers are also at a certain price level, but they do not know each other and they cannot match their orders. So at the end of the day, you need a broker to match every seller with a buyer and every buyer with a seller for everyone's transaction to be completed. And we know that when you're calculating pips, there are different ways of calculating pips. Currency pairs with 5 decimal places, you always ignore the 5th decimal place and calculate the pips using the 3rd and the 4th. So when you have a Euro USD price appreciating from 1.42760 to 1.42780, you should just understand that that is 2 pips, 78 minus 76. Now, anytime you have Japanese yen pairs present, then you know that they are quoted to 3 decimal places. 3 decimal places, that's going to be ignoring the 3rd decimal place and calculating pips using the 1st and the 2nd. So 105,134 to 105,234. That is 23 minus 13. You always use the 1st and the 2nd to calculate pips. Now, so the first important thing that we establish is the broker is responsible for an order matching process. Now, the second principle is the value of a standard lot. The value of a standard lot. What is the value of a standard lot? Now, we need to understand that anytime that we are buying quantities of the base currency. So if you're in a USD JPY market and you click one lot size means you are buying 100,000 units of USD. So you need to understand how much you are buying. When you go to the grocery shop, you buy 3 kilograms of meat, 100 grams of banana. That's the quantity you are buying. So in Forex, how much are you buying? You need to be able to know. If you cannot quantify how much demand or supply that is available, then that means you cannot even be an order flow trader. You really cannot be an order flow trader because you need to understand that there are various quantities of buy orders and sell orders in the market. And those orders are as a result of people buying and selling. So the base currency is always bought, and one lot size is equivalent to 100,000 units of the base currency. So when you're trading, you're either buying a multiplication of the lot size or a fraction of the lot size. A multiplication is like 5 lot size. 100,000 by 5, 500,000 buy orders. So when you click on 0.5, that's a fraction. That's 50,000 buy orders. When you click on 0.5 sell, that's 25,000 sell orders. Okay. That's just basically about it for the Forex trading terminologies. Now, every step we go higher into order flow knowledge. Now, let's look at the factors that affect the value of an exchange rate in the Forex market. Now, what we need to understand is that there's different reasons why the price is moving in the market. And every order flow trader understands why the market is moving. Every order flow trader understands why the market is moving. The Forex market is governed by the irrefutable laws of demand and supply. When we say irrefutable laws of demand and supply, we're talking about laws that are undisputable, undeniable, unchallengeable. You cannot challenge the fact that demand and supply is the reason why the market moves. When you throw something in the air and it drops back down, you do not question why it dropped. It's a law. So there's also a reason why the market is moving up and down. The value of any currency is determined solely by how much of it is in demand. No matter what the news is. Let's say the news is good. The normal knowledge means that people must what? People must buy. If the news is good, people must buy. But if we all decide to sell when the news is bad, the market will still go down. So the market doesn't pay attention to fundamentals, but the market pay attention to the actions of the traders. It's how much demand or supply is created. The reason why I don't care about fundamentals is that my trading strategy is just figuring out price levels where there's demand and supply. That's all that I care about. Whether the news, okay, hold on. The news came out, interest rate moved from 5 to 10. It's a good thing. People will buy. How much did they buy? That's all I need to know. How much did they buy? One lot size, then I know 100,000 units. If 5 people buy one lot size, then I know that 500,000 units at 1.3462. That's how you think. I need to understand how much buy and sell orders are available for me to quantify whether the market is going to go up or is going to go down. So order flow is the best way to predict which strategy. I don't know if you've seen some of my trades. My trades, some of them just touch the line and go. How do I have such accuracy?
Yeah.
How do I have such accuracy? Ask yourself that question. I can predict the market to, I'm not even joking. I can predict the market to 1 or 2 pips. 1 or 2 pips. I've done it many times on my chart. Some of my students have been doing it. So at the end of the day, Alan, do you know what some of my top students said when we discussed this issue about this guy? You see,
No.
do you know what?
What did they say?
No, I'm telling you that, first of all, the assignment that I'm on is from God. You understand what I'm saying?
Yeah.
Yes. So I've been anointed by God to carry on this task. That's why currently in Africa, I'm the only one teaching on that flow. Now, that's the first thing. The second thing is that I wasn't offended by him creating his own YouTube page. Do you understand what I'm saying?
Yeah.
But what I was offended by is plagiarism. He copied and pasted my stuff, which is a criminal offense. Do you know that?
Yeah.
No, Alan, I'm talking to you. You know that.
That's true.
So if you want to go and teach other people, that's your own issue. I don't care. Like, listen, competition is to make me better, but you can never be better than me because I taught you. So at the end of the day, don't copy someone. That's you're a criminal.
Exactly.
If I come to Nigeria right now and I say I'll find this boy, it's so easy. You understand? But it's not necessary. But I'm saying that it's a criminal offense to copy and paste my intellectual property. Do you understand what I'm saying? Create your own page and teach what you want to teach. But Alan, do you know the good news? Do you know the good news? He cannot teach it like me. He cannot teach it like me. Do you understand?
What? Exactly.
No, he cannot teach
that
it.
cannot be done.
No, he cannot teach it like me. That one, hands down. He cannot teach it like me. I've been studying order flow for 8 years. If you come to the professional course, I even have my own laws. That's how far I've come in Forex. I have Willie J's internal candlestick principle, Willie J's first, second candlestick principle, Willie J's first, second, third candlestick principle. Very soon I'll be going to America to put it into as my intellectual property. So I've come very far in Forex. So you've been learning from me just 1 month and you want to be stubborn. You understand what I'm saying? But these things are not really important to me. Anyways, I'm here to help people who want to make it in Forex. There are many lives I'm transforming. Every day I don't wake up and I don't see thank you. Thank you for changing my life. Thank you for changing my life. I see that message every single day. You understand what I'm saying? So, bro, I'm here to help everybody. All right. So, let's do that.
I understand.
So I'm saying there are 2 reasons why the Forex market moves. It's because of fundamental reasons and technical reasons. Don't go and stand somewhere and say, Willie J said fundamentals are not important. I said fundamentals are not important when it comes to order flow. Because if you say inflation went up and it is news, what are people going to do? They are going to buy. Don't you care about how much they bought? When a delivery guy brings a delivery parcel to your house, do you ask him what route did you pass and ask him questions? Have you eaten? Does that concern you? All you know is that you have your parcel, right? That's the same way. Fundamentals do not make sense when you are trading order flow. They make sense standing alone. But when you are talking about order flow, they do not make sense because when the news comes out, I'm not trading on impulse. I don't trade when the news is coming out. This is my process. Interest rates went from 5 to 10. Okay, what does it mean? It's good. Okay, people bought. The action has ended. I'll go after it has happened and say, how much did they buy? I'm trying to quantify the demand that is available with empirical evidence. Do you understand what I'm saying?
Yeah.
So at the end of this day, at the end of this, it doesn't really matter what happens with fundamentals. None of us pay attention to fundamentals, but we're still able to predict market turning points in advance with a very high degree of accuracy. Anyways, so fundamental factors are macroeconomic conditions that affect the valuation of a country's currency. So let's look at some major fundamental factors that play a role in a country's currency's price movement: interest rates, GDP, CPI, inflation, all these things. Technical factors are just a school of thought that employs price action to identify trading opportunities in trends and patterns seen on a price chart. Technical analysts believe that past trading activity and price changes of a security can be valuable indicators of a security's future price movements. Examples of technical analysis methods are trend lines, moving averages, Bollinger Bands. I'm just teaching you so that when somebody says they trade with these things, you understand. But even those, they are even flawed. Fundamentals are flawed, and even this is flawed. Because the effect of every fundamental data is already factored into price. If news came out on Tuesday and I'm trading on Thursday, then I can go to where the news happened and quantify the demand and supply that is there through price action. People wonder how I do what I do, especially being an African child, because they expect a white man to be doing what I do. Because it's just knowledge. It's just knowledge. I paid $5,000 to learn what I know. And that was just a beginner's course. I didn't even have money to continue. $5,000 for the knowledge that I have. So it's really something that has changed my life, and I'm also willing to share it with you if you are willing to go the extra mile. So these technical factors, they lack price. Look at head and shoulders. They tend to enter at the neckline, but look at the distance between the neckline and the head. So you see, all these things make you trade when the move has already happened. You know? Mm-hmm. It makes you trade when the move has already happened.
Yeah, that's true.
Yeah.
Wow. Look at how price was going up. Can you see the screen like 4 different screens, or how do you see it?
Yeah, I can see the screen.
No, but do you see it as 4 different screens?
Yeah, 4 different screens. 4 different screens.
Okay, I'm telling you that. Look at how price went up. Look at where I sold. Do you see the green line is where I sold with the arrow?
Yeah.
How you see exactly on that line? Look how I just touched that line exactly. I put my stop loss here now. Now look at where price is trading. You see, it's about market turning points. When you know exactly where the market will turn. So Alan, tell me this. Before you met me, you didn't believe it was possible to predict the market, right?
I didn't believe it was possible to predict with that accuracy.
Okay, that's good. That's good. All right. So I said all thoughts and perceptions, regardless of economic news, will either make traders buy or sell, which will create demand and supply in the market. When people are buying, it's creating demand. The reason why it's creating demand is when they are buying, they need to put a lot size there. Alan wants to trade 0.5. Azam wants to trade 1 lot size. That's 150,000 buy orders at a certain price. Do you understand? Mm-hmm. So it's a simple thing. Whenever the sell orders become more than buy orders, price will drop. Whenever buy orders become more than sell orders, price will rally. So if you can find those points of imbalance, then you always have a good trade. Do you understand?
Yeah. Yeah.
I can see your man is busy. All right. So let's look at the last thing. I was actually going to finish this course, but because of the timing, I have to rush to the bank to do something. So tomorrow we'll finish it definitely. But usually I finish it within 1 sitting. But just that I had a call from the bank. I have to go and sign something. So let's just do the characteristics of big banks and institutions. Now, this is a very important lecture topic. Now, after this course, we are going to be diving deeper into order flow. Now, let's look at what makes banks and institutions successful and what makes retail traders not successful. Now, let's look at this. The forex market consists of a lot of participants. Millions of people are trading, but it can only be put into 2 groups. It's either you're a big bank and institution or you're a retail trader. Statistically, big banks and institutions have very huge account sizes and they are very consistent in profits. On the other hand, retail investors are not consistent in profits and they have relatively small account sizes. So look at what you're establishing. Big banks and institutions have big account sizes. Retail traders have smaller account sizes. These two groups are always matched up against each other in the same markets. Yet why are big banks and institutions so successful and retail traders are not? This is because big banks and institutions trade the financial markets differently, despite their sophisticated algorithms and trading softwares. Now let's look at this. Big banks and institutions are so patient, they wait for price to become cheap before they buy, and they wait for price to become expensive before they sell. So if this is how banks trade, then that means that when they want to buy, they wait for retail traders to sell first. Do you understand?
Yeah.
Because it's that selling action that drops the market, drops the price to make it cheap and favorable for them to buy. When the price goes up, retail traders, based on good news, are just making the market over expensive. And it will obviously get to a price level of greater supply and it will start dropping. They have huge pending orders to fill, and most of their orders are not filled at once. So the whole strategy here is that we know that banks and institutions, when they are trading, they do not get the opposite of their trades all the time. Meaning that when they are buying one lot size, they do not get one lot size sell. You understand what I'm saying?
Yeah. Okay.
Yeah. Yes. So that's what we need to understand. Retail traders are not consistent in profits, and they buy after an uptrend and they sell after a downtrend. That's how we've been conditioned to buy. We buy after an uptrend. It is going up before we buy. Look at this trade here. It was going up. I didn't buy. I was not convinced about this buy, but I knew this buy will end here and a new sell will start. So that is just basically how to understand these markets. Do you understand?
Yeah.
Yeah.
Okay. So that's about it. Now, the three mistakes retail traders make, the two mistakes they make is they buy after an uptrend and they buy into supply because they do not know where supply is. It's only a supply and demand trader that will be looking up for supply and down for demand. That's why when retail traders buy, they don't know where to take profit. How do you know the uptrend is going to last 100 pips, but you entered at 90 pips? 90 pips means that the trend will end in 10 pips. Am I right?
Yeah.
So how can you put your take profit 30 pips? Price will not reach your stop loss and price will come back to hit your entry because you do not know the market turning points. Do you understand what I'm saying?
Yeah. Correct.
So to have these knowledge, you need to understand that banks and institutions, they always create demand zones and supply zones when they are trading. It's not like they sit down and they want to do it. It just happens because of who they are. Now, a demand zone is a price level or a price floor. You cannot go below it. And a ceiling, how many of you can go below your floor in wherever you are? All of us are in rooms right now. How many of you can enter the ground? Tell me. Azam, can you maybe have some Bangladesh powers? Can you enter the floor?
No.
That's a demand zone. And you can also go above your ceiling. That's a supply zone.
Yeah.
So the banks and institutions, they create demand and supply. You see, I want to always be careful that I'm not teaching demand and supply based on what people teach on the internet. I'm teaching pure institutional order flow. But because it's also demand and supply, that's why sometimes I say demand and supply. But I told you everything on the price chart is demand and supply. So if you're a demand and supply trader, you are trading everything on the price chart. That's why you're not making money. You have to focus on big bank and institutional demand and supply. So banks and institutions, they always need the opposite of their trades. This is because there's an imbalance of buy orders to sell orders. Now, when the bank is buying one lot size, that's 100,000 buy orders. The broker needs to match them with 100,000 sell orders. One lot size buy needs one lot size sell. But when they want to buy 100,000 units and there's only 40,000 units, there will be an imbalance. And that creates a demand zone. So we need to understand that. We'll look at that in the order matching process section. But we need to understand that retail traders should trade close to the levels of unfilled orders because the probability of price rallying or declining from these levels is very high. So far, everything has been very straightforward. and it's very easy to understand. And I don't know. I assume you guys do not have any questions. Are there any questions you want to ask? If not, we can call it for tomorrow, same time.
Yeah, no issues.
Alan,
Yeah, I understand so far.
Well, I'm free tomorrow morning. If you're fine, I can attend in the morning also as well.
bro, you just said something quickly, muted yourself again. Like, what's up? If you are busy, let me know, man.
Okay, no,
Alan.
or else this time is fine with
No,
me.
I'm talking to Alan.
Yeah,
What is
I'm
it?
here, bro.
Bro, yeah. So, bro. Anyway, we speak tomorrow. Okay, Azam.
Yeah, sure.
Okay.